Hey, what's up, everyone? Swinging Bull here with PB Alerts, live on YouTube and Twitter and Twitch. And if anyone's listening in from the Discord, it looks like Discord's down right now. I don't know if anyone can comment in the chat here and let me know if it's down for them as well. But I'm not able to get on the Discord on my desktop, nor my mobile app here. So looks like the servers on Discord are down. Um, Again, if anyone can confirm that, that'd be great. But that's not going to stop us from streaming here. Again, this is Swinging Bull with PB Alerts. Not really going to do any live earnings on this stream. What I wanted to do is talk about the big bank earnings that are coming up. Specifically, tomorrow we have JP Morgan reporting. We'll go over Bank of America, Wells Fargo, Citi, Schwab. That'll probably be about 30 minutes of streaming right there. So go ahead and get into it. Just a quick recap on the market today. We had another down day. S&P is down 3.4%. The NASDAQ is down 4.19%. The Dow is down 2.5%. So right across the board, VIX is up again today, sitting here at 47.29 for the VIX. 10-year yield actually just went green a little bit. The dollar index, the Dixie, is down almost 2%. So again, another down day. And of course, what happened yesterday with the rally that we had yesterday was a 90-day pause on the tariffs. And what happened today, the selling today, was directly related to the deal, the back and forth with the China tariffs. Okay, so last report I read that China tariffs are up to 145% from 125%. So I know it doesn't seem like much, 125 to 145, but that extra 20% on China is kind of the direct result from the selling from pre-market and then obviously into the opening move, which was a down move. SPY and the triple Qs trying to recover though, as the regular session just closed a few minutes ago. I'm looking at the 15-minute chart. Did get a higher low on SPY on the 15-minute, so that's something. Same thing with the Qs, got a lower high over here as well. So we'll see what the remainder of the after hours price action is going to be. And then, we'll go from there. And yes, Pookie on YouTube, smash that like button. Yeah, it looks like, thanks for pointing that out, Pookie. I was not able to get into Discord on my desktop nor on my phone. So it looks like the servers on Discord are down. Let me see if I can refresh the page and see if it comes up. Give me 1 second. This is basically what Discord's doing here. So you go here and it just kind of stays on this page here. So Discord, it does have an outage right now. So I apologize to the Discord people. I just can't get on it. But I figured I'd still come on here on YouTube and Twitter and Twitch and share my thoughts with everyone on the upcoming bank earnings, the big banks that are going to be reporting. So let me just go over a few things first before we jump into it. Obviously, taking a quick look at the updated heat map here, and obviously bright red. Got a little pocket of green here in healthcare, but other than that, a little bit of green in consumer defensive, but obviously the sellers just took over today. And I was looking at the sector information just a little bit ago. And looks like the only sector that was green today was consumer staples. So maybe give you a little idea of maybe where some of the money is going. Let me get rid of this pop-up ad, excuse me. So consumer staples got some money today. Every other sector was red. Okay. The bottom of the pack, we got energy, information technology, consumer discretionary, of course, consumer discretionary and tech, those are going to be your risk on sectors there. So we got risk off at the top here, consumer staple, basically risk off. So that's what the sector information is looking like. The economic calendar for the rest of this week. Of course, yesterday we had the minutes meeting. Today we had CPI come in. It did come in cooler than expected. The year-over-year CPI came in at 2.4%, and the forecast was 2.6%. So that's good. That CPI. We got some inflation metrics that are cooling. Core CPI, which strips out energy and food, that came in at 0.2%. Or I'm sorry, the forecast was 0.2%, and the numbers came in at 0.1%. The actual reading. Core CPI year over year, that's the number a lot of investors look at. Forecast was 3%. The number came in at 2.8%. So good news on inflation cooling. That's a bit of a little breath of fresh air, I suppose, with how the market's been performing the last month or two. And of course, we had a bunch of Fed speakers today. Goolsbee was making the most impactful comments. Everyone should have saw some news articles come out about what Goolsbee was saying. Tomorrow, Friday, we got CPI's sibling, if you will, which is going to be the PPI, the Producer Price Index. So that's kind of like the second part of inflation. Of course, we got PCE as well, kind of thrown in there. That they usually do that the week after. Actually, I think we had PCE data last week. But we got PPI tomorrow morning before the bell, 8:30 a.m. Eastern. Definitely been known to move the markets. But of course, I think what holds the most weight in the markets is going to be the back and forth with the China tariffs. So, hopefully over the next few days or week, I'm not sure how long it's going to take, but hopefully we can get some more clarity on the tariff situation with China and the U.S. And as soon as we can get more clarity on that, I think the markets, will recover in due time. So, just a couple words of encouragement. Markets are going to recover. It's, try not to freak out. The worst thing you can do, not financial advice, but the worst thing you can do is panic sell at the bottom. Okay, that's probably the worst thing you can do. So just try and stay strong. If you still believe in the companies that you're currently invested in, just try and stay strong and weather the storm. Everything will ultimately be okay. It's just going to take a little bit of time to get through the tariff uncertainty, especially with China. Okay. Of course, the markets rallied yesterday afternoon because of the 90-day pause, but then it kind of retraced a bit today because of the increased tariffs on China, which came in at 145% now compared to previously it was only at 125% now. So that's basically what happened to the markets today. Okay. Let me just check Discord one more time. Take a sip of water real quick. Okay, looks like Discord is still down. So we'll just keep marching forward here. So let's kind of talk about some of these banks that are going to be reporting. First and foremost, I wanted to go over JP Morgan. So let me just actually close some of these down. I got too many of these windows open, getting too many pop-ups. But let's start. I just want to go over some information on JP Morgan. First and foremost, they report tomorrow, Friday, April 11th at 6:55 a.m. Eastern. So they do report before the opening bell. The consensus for the EPS, or the forecast, if you will, is 4.62. The forecast revenue is 42.98 billion. So we will see tomorrow morning what their EPS and revenue is, and of course some guidance. And that's kind of what moves the markets. Now is a lot of weight's put on the guidance. So we'll see what that comes in tomorrow morning and see how JP Morgan's stock price reacts to that data. JP Morgan is currently trading below their anchored VWAP. Anchored VWAP's around maybe just under 250 a share. So JP Morgan closed the regular session today at $227.12 a share. So they were down 3% today. But like I said, even this chart is making the higher low here, as well as kind of doing the same thing that SPY and the triple Qs are doing. So it looks similar and could be promising for the remainder of extended hours price action. And then, of course, we get the pre-market price action when they release their earnings data. So Going into the earnings, they were sitting on a PE ratio of 12.38. They do pay a small dividend of 2.47%, so a little cherry on top there with the dividend. EPS nice and positive at 19.75. That's the trailing 12-month number there. And just looking at some of the financials, obviously JP Morgan is a profitable company, profitable bank. They've had positive net income 5 quarters back to back to back. Year over year numbers are decent. On the annual side, they've obviously had positive net income for the last 5 years, and I don't think that's going to change anytime soon. So it's a solid company. It's a solid bank. Their financials are pretty good. Balance debt to asset ratio is a little high, but it's a bank. What do you expect with the banks, right? But it's at 91%. It is still below 100%, so it's not like their degree of leverage is what we say is they're not really over leveraged. Now, if that debt to asset ratio was over 100%, maybe that could be a little concerning there. But again, it's a bank. They specialize in debt, so I'm pretty sure they're managing it accordingly. But yeah, JP Morgan, obviously it's a favorite for investors. They have a really strong quant rating, basically a quality, momentum, and growth stock with a dash of income and value there. But pretty strong quant rating on there, and most all the financials are nice and positive as well. So. Looking at the chart, I just wanted to go on the bigger time frames. We'll go weekly chart. Obviously, this week has been a good week for JP Morgan after hitting a previous low from last week was around 208. So they're up almost 20 points for this week, which is a nice bounce back for them. Probably a little bit of resistance in the upper 230s. Probably around 238. You can see from my volume profile here, we got a big volume shelf sticking up around 238. Looks like that's the level the sellers kind of rejected it from today, as you can see, or should I say this week, as you can tell from the upper wick on this weekly candle print, has a pretty sizable upper wick compared to the bottom. So sellers have been rejecting it around the 238 level. Which is a pretty clear volume shelf here on the volume profile. This is the Webull desktop app here. Just wanted to check a few more things here on TradingView. Let's see, JP Morgan. Okay, let's see here. Okay, yep, dividend yield 1.9%. So that's a little more accurate than what Webull was saying. The last payment was $1.25 a share. And the last ex-div date was January 6, 2025. So just some info here to keep in the back of your head. Obviously, the technicals are at a sell. The overall market is kind of at a sell right now. But overall, I like JP Morgan as a bank. It's a pretty good company to have in your portfolio, especially with the added bonus of the dividend. So let me go ahead and just kind of march forward. I wanted to go over some things here. Give me 1 second. Let me see if TipRanks will let me in. And I just wanted to go over some data. Okay, they want me to pay for a premium membership, so I'm not going to do that. But just kind of looking at some more info here. What I want to do is let me look at the options chain just for a second, and then we can maybe see if we can put a potential trade together. Again, well, this is the thing. They have earnings before the bell tomorrow, so we wouldn't be able to actually get this trade in as far as options go. But I guess what I can do is show you what kind of trade I would have done potentially for the earnings, right? So what we can do is, let me actually open up Thinkorswim real quick. I want to get the expected move for JP Morgan for tomorrow's expiration. And then what that is going to tell us, it's not 100% rocket science, but once we get the expected move, it can help us put a trade together, which I probably would do a long iron condor. So that's different than a short iron condor. Of course, a short iron condor is 2 credit spreads on each side of the underlying stock price. And in essence, we're trying to kind of keep the underlying stock price in the middle of our 2 spreads. So that's kind of how you make money on the short iron condors. It's a traditional iron condor, I would call it. The long iron condor is actually a debit spread on each side of the price. And those are the condors that we deploy when we're expecting a big move, AKA for an earnings catalyst, something of that nature. So once I know what the expected move is, it can kind of tell me how far apart I need to place my spreads on each side of the price of JP Morgan for for a move to break out of my spreads. Because on a long iron condor, the way we make money on those is through a big move. If the underlying price stays flat, that's where the risk lies with the long iron condor. But of course, I usually only do these for earnings catalysts where I know there's going to be a big move, and we've had a pretty good success rate on it. Let me just log into my Thinkorswim real quick, and we'll get that expected move real quickly. And then we'll do the same thing with a few other banks, and we'll kind of see how much time we have left at that point. But let me go ahead and get logged into Thinkorswim. While that is being pulled up, we can take a quick peek at Bank of America would be the other big one, right? So Bank of America actually doesn't report until Tuesday, April 15th. So that's this coming Tuesday, next week. Their forecast EPS is 0.81, positive 0.81, and their forecast revenue is 26.74 billion. So they've got quite a bit of revenue as a bank, obviously one of the biggest banks around. Their anchored VWAP is right around $42, and that they're trading just below that. So their earnings reaction is going to be very interesting to see, and I'm definitely looking forward to their earnings. So here we got Thinkorswim pulled up here. So I just want to go to JP Morgan first, and we'll kind of find out what the expected move is going to be for tomorrow's expiration. So on Thinkorswim, it's very easy to find what the expected move is. Once you go to the option chain, just pick out the expiration date that you want the expected move for. And then over here on the right, you can see in parentheses, it'll say plus or minus, and then a number. Well, JP Morgan is plus or at this very moment, their expected move for tomorrow's expiration is plus or minus $12.90. Okay, that could be up or down. So now that we know what their expected move is, the idea is to put the long iron condor is to space out my spreads on each side of the price to be within that expected move. Because if that expected move occurs, then I know that the underlying price of JP Morgan is going to breach either the top side or the bottom side of my spread. So I'll have a spread on each side. The good thing about the long iron condor is I don't care if it goes to the moon or burns to the ground, as long as we can make money if it goes up or down. As long as the underlying price gets on the other side of either the top side or the bottom side of our condor. Where the risk lies again is if JP Morgan doesn't have a big move. Like their expected move is $12.91. If their realized move is only like 4 or 5 points, well then that long iron condor will probably be a loss. The good thing is if we can catch it first thing in the morning, because let's be real, either we get the move or we don't, right after the earnings. And then of course we got the price action for the rest of extended hours and leading into pre-market. But by the opening bell, we haven't got the move that we're looking for to make money on the long iron condor. We could actually close the condor out and get a good, it just depends on what the IV crush is going to be, but we'll probably be able to get a good chunk of our money back possibly. We'll see. But now that I know that the expected move is plus or minus $12.91, now we can actually build out the condor. So I'm going to pull up another screen here and use a program called Option Strat. Pretty neat program I like using to actually build out some of my more complex trades that have multiple legs and things of that nature. So anyways, with this particular trade, we don't need to put a bunch of time on this because this long iron condor trade is specifically for their earnings catalyst tomorrow morning before the bell. So I'm just going to pick tomorrow's expiration because, like I said, either we get the move or we don't, right? There's really no mystery behind the trade. It's not like we open it up and put a bunch of time on it and now we just got to kind of, wonder if it's going to work out or not. This is kind of like a one hitter quitter. It either works out or it doesn't, and we'll know by tomorrow morning if it's going to work out or not. And if it doesn't, after I build this trade out, I'll actually show you on the table where we could, if we don't get the move we're looking for, we can close it out first thing in the morning and potentially get a percentage of our money back that we put into the trade. So this would be what I would do. A long iron condor does consist of 4 legs. Okay, so this isn't just like some basic option, naked call or naked put. It does have 4 legs on it, so it can seem a little bit daunting because of all the legs on it, but once you've done it a few times, it's actually not hard at all. So of course it's going to be a spread on each side of the price. So I'm going to put 2 call legs in and 2 put legs in. Obviously the call side is going to be on the top side of JP Morgan. Actually, let me make sure I put JP Morgan's ticker up here because I was on SPY. Excuse me one second. So let me go ahead and put my legs back in. So 2 call legs and then 2 put legs. Okay. And of course, the calls are going to be up top and the puts are going to be below the price. Now, the type of spreads for long iron condor is going to be a debit spread on each side of the price. So there's going to be a call debit spread up top and a put debit spread below the current price of JP Morgan. Okay. So we can kind of build out the top side first. And again, we know there's an expected move of $12.91. And again, I want to repeat, those expected moves aren't always, solid. Okay. Sometimes it'll go double the expected move. Sometimes it goes half the expected move. But it is a good piece of data that we can use to help build out the trade. All right. So first with the call debit spread up top, well, let's do a little bit of math. JP Morgan's trade, we'll just go with $227 a share. Okay, so that's what they're trading for. And if the move ends up being a positive reaction, well, that's going to be 227 plus we're just going to use the expected move as kind of to help us build the trade out. But we know it's around 12 or 13 bucks. I'll go with 12. So I want to make sure my call debit spread on the top of the price of JP Morgan is in between 239 and 227. All right. That way, if the expected move happens or even more than the expected move happens, I know the price of JP Morgan is going to breach my call debit spread and it's going to be in the money. And that's how we make money on this trade. Right. So we got a good idea here with a debit spread on the call side. The one you're buying to open is always going to be closer to the price of where JP Morgan's at. So let me just leave that at 235 for now. And then I'm going to put the 237. We can probably, I'll set one up for maybe 5 wide and just see how the numbers shake out of the bag. So the top side, we could have the buy to open the 235 call, sell to open the 240 call, right? So now I just want to, I always like to center my condors as best as possible when I'm actually putting the trade in. And what I mean by that is I want the actual price of JP Morgan to be exactly in the middle of my iron condor. That way, whether it goes up or down, I'm not really biased to one direction. And it won't matter if it goes up or down. I'll show you from this graph here that I will be in a position to be able to make money on this trade, whether it goes up or down. That's the beauty with these option strat calls it an inverse iron condor. but technically it's called the long iron condor because we're paying a debit on the onset of the trade. All right. So this here is probably the trade that I would have done on this. Chance of profit is really nice. And just you can see if you're looking at my screen here, option strat is kind enough to give us our break evens on each side. So basically, to be profitable on this trade, I just need JP Morgan to either be above 237.51. You can see this blue line here. That's my break even on the top side. Or JP Morgan can be below 217.49. All right. So whether it goes above 237 or below 217, this will be a winning trade. All right. Now to get let's talk about the risk reward. I do like this trade. It is basically at a 1-to-1 risk reward. So it would cost about it's the option strat is saying 251, but just for even numbers to make it easier for everyone to understand. Basically, it's going to cost 250 to open the trade, and then the max profit is 250. All right, so that's a 1-to-1 risk reward. Now, some people think, well, I have a 5-wide call debit spread up top on the call side, and then I have a 5-wide debit spread below the price on the put side. Wouldn't that be, wouldn't I need $1,000 for that trade? That's not how condors work. Your broker will give you a buying power reduction because you have a spread on each side of the price. So I don't want to say they completely cancel out, but the bottom line is that even though I have a 5-wide spread on each side of the price, the value of this entire iron condor is worth $500. All right. So if I got to pay $250 to enter the trade, that leaves $250 as my profit. Because if the trade works out, you get your $250 back that you originally used to open the trade, and then you get a $250 profit on top of that. Because basically you're going to cash out $500, but you paid $250 to enter, which would only leave $250 as your profit. But still, great risk reward, I think. I mean, it's and we have 2 ways to win the play. If JP Morgan has a positive reaction, we can win. If it has a negative reaction, we can win. Let's talk about where the risk lies. So now that we know we can win the trade on 2 fronts, like that's what I was saying earlier. I don't care if it goes to the moon or burns to the ground. I'm going to make money either direction. Okay. But where the risk lies is if JP Morgan stays flat. Okay. Tomorrow morning, when the opening bell rings, I don't want JP Morgan to be stuck in this red tent here. That's where you're going to have your risk. Okay. Now, if I go to the table and let's just kind of look at the table real quick, a nice little neat table. It'll tell you the price of basically what this condor will be worth depending on what the price of JP Morgan is over here on the left side. So you can see, even if we are wrong about the direction, you can see, and the volatility will probably come down a little bit. I can probably adjust for that. I'll bring it down to 100 from 130. But you can see, even if we wake up tomorrow morning and JP Morgan is still in our red tent, I would try not to lose this whole 250 that I originally used. You can see here, we could stop out of the trade tomorrow morning if we don't get the move by open, and we would get a little bit of our money back. Okay, let's just say JP Morgan just stuck at 225 for whatever reason. You can see here that you'll lose 176 of the 250, but hey, at least you got a little bit of the money back. So what would that be, like $75 you'd get back? So that's what I was saying. If you manage the trade correctly, you technically won't risk the entire 250. And let's just say you end up taking a 175 loss. Then in all actuality, on the onset of the trade, it's actually a better than 1-to-1 risk reward if you think about it. Because if the trade works out, you're gonna bag a 250 profit. If it doesn't work out, you could stop out. Yes, you'll take a loss, but what's making $250 on the trade if it works out, compared to possibly losing 175, that's still going to be 142% return on your risk if the trade works out. All right. So different ways to kind of look at the math behind it. But I personally love these trades, again, because I have two ways of winning the trade. It's not just I'm biased, like, okay, I'm going to buy a call, I need it to go up to make money, and that's the end of the story. Or I buy a put, I need it to go down to make money, and that's the end of the story. With this trade, now I have more scenarios that could happen, right? It could either, have a nice positive reaction and I'll make money, or if it has a negative reaction, I'll make money. Again, the risk lies where we don't want JP Morgan still in our red tent here, basically in between our break evens. We don't want it in there. As long as it can break out of this red tent, we have two ways of potential profitability to make money on it. And so these are the types of trades I do on the earnings catalysts. Okay. I've got a really good win rate on them. I alert these to the members in the Discord a lot. And this is my preferred earnings trade. If I end up not doing a condor for earnings because I am biased, whether I'm bullish bias or bearish bias, then and I still won't even do naked options in that case. What I'll do is I'll basically just do a debit spread on it. So if I'm bullish, I'll do a call debit spread. If I'm bearish, I'll do a put debit spread. And if we construct the trade properly, these debit spreads can still yield a triple digit return, percentage return. So that's while also knowing exactly what our risk is going into the trade, and of course knowing what our max profit is going into the trade. So that's in lieu of an iron condor. If I didn't want to do a condor and I was biased on a direction, I would just do a straight up debit spread, whether it be the call side or the put side, depending on where my bias lies. And I can go over that in another stream. But let me make sure I didn't miss any questions here. We got Pookie on YouTube. Okay, he had to jump off for a little bit. He said, thanks for the stream. Aru West on YouTube, welcome to the show. Happy to have you here. You said, can you cover worst case scenario? Okay, so yeah, just and maybe I already answered this, but worst case scenario, JP Morgan stays in the red tent and you hold it to the end of the day tomorrow. It's and that's why I manage these trades first thing in the morning, because I am able to get some of my 250 back, right? If I can get a little bit of a if the trade doesn't work out, I can get a little bit of my money back. And now the max risk, where the danger is if you manage to trade this way. We don't get the move we're looking for. Tomorrow morning comes around, the opening bell rings, now the regular session is open, and you hold it all day hoping and praying we're going to get the move. That is not the right way to manage this trade, I don't think. Can we ultimately get the move sometimes throughout the course of the day after open? Yeah, but I don't think it happens a lot. I think if we don't get the move right away, the chances are more than likely than not that we're not going to get the move. So I'd rather get a little bit of a refund for what I paid for the trade first thing in the morning because we didn't get the move, instead of hoping and praying, waiting until 4 p.m. Eastern that, okay, JP Morgan's going to do something, and then it never happens. That's when you're going to be looking at the max loss. I don't manage them that way, because if it doesn't work out, I'd like to get a little bit of my money back. But like I say, we're batting like 80% on these win rate. So, I'm not going to blow smoke up your ass and tell you that these are all going to, they're winners all the time. We do get a loser here and there. But as long as the risk reward is 1-to-1 or better, I mean, we technically only need to win half of them, right, to be net profitable. And again, it's important to keep your risk reward 1-to-1 or better. And that will ensure that you don't need a super high win rate when doing this. As long as you're winning more than half of them and your risk reward is 1-to-1 better, you will be net profitable at the end of the month if you've put on 4, 5, or 6 of these. Okay, so make sure you're winning more than half. And because we normally do get a big move for the earnings catalysts, that's a big part of why we have mostly winners. All right. So, this is by far one of my most favorite trades to do on the earnings. And again, I don't want to sound like a broken record, but it's directly related to the fact that I don't have to be bullish or bearish, right? Like I don't have to pick one side or the other. We can make the money either direction. Where the bias is we don't want it being flat, and you don't want to hold it until the last minute of the expiration day. A good management technique that I use again is I'll just manage the trade in the morning. Sometimes I can get a lot of the money back. Sometimes I can just get a little bit of it back, but it's better than taking a full loss. And I know definitely I can make the loss back on the very next trade because my risk reward is proper, right? So it's important you kind of keep all that in check. And like I say, if you manage them correctly, it's a really neat strategy, and it's a lot of fun. So anyways, I know we didn't we hit JP Morgan pretty hard here, went over Bank of America just a little bit. Let me just go back to YouTube, make sure I didn't miss anything. Okay, Eruez. Yeah, you got most of my questions. All right, no worries. I'm glad. I clarified, and that's why I like doing these streams. Is sometimes, especially if I can say something about a strategy, maybe you were already thinking about it, and you just needed like clarification. And if I can say anything that kind of solidifies what you're already thinking, then hey, I did a good deed today, right? So that's what I'm all about. I've been in my name's The Swinging Bull again, and the Discord is PB Alerts. Been with them for about 5 years now, and I'm basically the advanced options coach. This is really the only way I trade. I do lots of credit spreads, lots of debit spreads. We do the condors. I run a lot of the wheel strategy, of course, on stocks that I don't mind owning. Very important there. And that's basically how I trade, and it's a lot of fun. And if you're sick of the rat race of trying to day trade, every day, and it's just maybe you're getting smacked around a little bit trying to do that, and it's not for everyone, and for me and my personality, I'd rather have defined risk, and defined reward. Like I know exactly the possibilities of the trade before I even enter it. So it kind of takes out a lot of the guessing and the mystery behind things. And I basically target weekly and monthly income. And we do a lot of sell to open. All right. We're the ones actually writing the contracts and selling them to people. Okay. We're the ones actually creating the liquidity on these strikes. Anyone, you premium sellers out there, you know exactly what I'm talking about. Another way I've been explained to people is I'm a theta trader, right? And a lot of my trades, especially obviously on the credit spread side, theta is actually our best friend. I love theta. Me and theta are hanging out all the time, making money. And when we got some day traders trying to day trade during the day, and they're all kind of moaning about theta, and I'm over here just kind of quietly smiling, let's go. I want these contracts to go worthless, because if I sell to open the contract, I'm collecting credit on the onset of the trade. If that contract loses value, and I can buy it back cheaper and pocket the difference, that's in essence how I'm making my money. And better yet, if it goes worthless, then I keep 100% of the premium I collected when I originally wrote the contract and sold it to someone. So, and I don't know if it's changed, but you've heard the old saying, 80% of options expire worthless. Well, I'd like to be on the right side of the transaction on that one, wouldn't you? So that's when I, years ago, when I decided to become an option seller, compared to being an option buyer, it just fits my personality well. I don't have to be glued to the screen like a hawk all day. More times than not, I manage most of my trades on Fridays and Mondays. That's usually where I'm managing my trades, whether it be taking profit, rolling to the next week's expiration, or opening up new trades as I'm closing some out for profit, which is basically what a roll is. So that's kind of give you an idea of like the time needed to kind of do the type of trading that I do. Is it's great for people that have other stuff going on. And I'm over here in Florida, and I have some brick and mortar businesses that I own that need attention, at times. And I can't be glued to the charts all the time because I'm trying to handle business on other fronts. And it's just easy for me to trade on, manage my positions on Fridays and Mondays, and then I can kind of do what I need to do during the week, right? Now, sometimes I got to manage during the week if the underlying price had an unexpected move of some sort, and there's management techniques I can help show everyone on how I think the right way to manage some of these, especially if it's a multi-leg option. We can start managing the legs individually, and I teach this to everyone in the Discord, but just to give everyone an idea kind of what I do over there. And I put out alerts weekly. I normally have 5 or 4 to 6. 5's kind of the sweet spot. I usually have 4 to 6 trades open at all times. It's kind of like my little pipeline. And every single week, I'm usually closing one out and opening a new one. And I like to keep like 4 to 6 going at one time. It's a nice little drip of income that comes in either weekly or monthly. So that's basically what I do over here. Just real quick, because I know we're running out of time. If you do day trade options, because don't get it twisted. I'm not saying day trading options is like bad and all this stuff. All I'm saying is it's not for everybody. But if it is for you, some people are really good at it. We do have a coach in the Discord. His name's Coach Ethan. He trades the opening move every morning. He makes his money in the morning, and then he's pretty much done for the day. All right. And that's a good deal, right? If you're good at it and you can do it. So if that's what you do, is you just want to make your money in the first few hours and then go spend time with family and friends after that, and that's it. You're going to want to go see Coach Ethan. All right. He live trades every day and shares his trades live on the stream. You can see his orders that he's putting in and everything. So you want to go see Coach Ethan. Now, so there's 2 things there. You can be an option day trader, go see Coach Ethan. If you want the more advanced options, multi-leg strategy stuff, you're going to come see me, Coach Bull or Swinging Bull. And then the third coach is Mad Maverick. His name is Lee, but it's Coach Mad Maverick. He is an expert in all he basically trades is stock. And he swing trades stock. Okay, that's like his bread and butter. He does trade options and he's very good at it, but his bread and butter is swing trading equity and stock. Okay, so maybe that's your cup of tea. You're gonna want to go see Coach Mad Maverick. But we got something for everyone, and I always have a lot of fun with the members, and a lot of feedback we get from the members is they're constantly learning new stuff, and we got some great support. Over here in the Discord. And another thing, we don't really put up with any drama. Okay, if there's any drama, we nip it in the butt. We don't put up with disrespect. We're here to make money. Treat it as a business, as it should be. Okay, so we don't really put up with any shenanigans. Like I say, we're here to make money, and that's what's most important over here in the Discord. So anyways, I really enjoyed streaming. I hope y'all enjoyed kind of watching me go through how I would build out a condor trade for an earnings. I hope everyone maybe learned something, or like I said before, maybe it just reinforced something you were already thinking. And like I said, yeah, if you're looking for a new home, check the links in the description. And if you do join the group, PB Alerts, tag me in the chat. I'll come by and say hello, and definitely look forward to meeting you. But other than that, I hope everyone enjoys the rest of their night, and I'll see everyone in the next stream. Cheers, y'all. Bye.